Good morning, everyone. My name is Chiu Sok. I am truly honored to stand before you today as the Chief Financial Officer of StarFood. On behalf of the entire finance team and myself, I would like to welcome everyone of you. As the CFO, I am privileged to lead a team of dedicated professionals who work tirelessly to ensure the financial health and sustainability of our organization. Today, we are here to discuss our financial achievements and challenges. Okay, please welcome our audit committee, Mr. Tam Wei Jun, to share his part.
Okay, good morning everyone. My name is Tam Wei Jun and I will share my standard review. So our organization is developing a new structure to house a food development center. The building may be utilized by a development group for about 6 years and longer. The department group of our organization may plan the project to increase the building's work and functionality after the 6 years. And according to an immediate assessment, this building has a 10-year lifespan. Based on the FRS 116, an asset must adhere to specified official standard in order to be classified as the property, plant and equipment. We also call this as the PPE. Future economic advantage, vulnerability assessment and vulnerability control is the general requirement that must be met. First, we will come to the future economic benefits. There must be certain to flow to the entity and be available to and have several advantages for the business in the future. Our food development center will have the advantage they have stated is because food is something that everyone needs and the evolution of food will become well known. The second one is the availability measurement. The assets of our organization may be clearly measured in terms of availability. It implies that the cost of an asset can be visually calculated and it has higher worth. It can provide specific for the financial statements analysis. Specifics found that the company's financial status has a clear aim to create a program for the future. Lastly, we will come to control. Our business can exercise physical resource control over the assets while letting the business handle the service for the product. If an asset can be managed in a favorable state, it can gain future economic advantage and be consistently measurable. For the food development center, it can easily be controlled to produce what type of the food. Based on the FRS 116, we can conclude that our firm complies with all of the criteria used to establish which type of assets belong to the company. Therefore, for our company financial statement, it may be categorized as the PPE. That's all.
Thank you, Mr. Tam Wei Jun. Next, let our finance director, Mr. Chen Mei Hui, to share his part.
Good morning, Mr. CFO and everyone. I am Chen Mei Hui and my position in this company is Finance Director. Now I will going to explain about initial measurement and recognition. Under the MFRS 116, or we call as Malaysia Financial Reporting Standards 116, property, plant and equipment companies are required to recognize and measure property constructed for their own use as follows. First, recognition. Plant, property and equipment (PPE) should be recognized as an asset when certain conditions are met. In the case of the property constructed by our own company, it should be recognized as an asset when, first, it is probable that future economic benefits associated with the property will flow to the entities. Second, the cost of the property can be measured reliably. In our scenario, the company has constructed a property and it is highly probable that future economic benefits will be derived from the use of property. Therefore, this property should be recognized. Second, measurement. Once we are recognized the properties, and we should measure the initial cost. The cost includes all expenditures that are directly attributed to the acquisition, construction, or productions of the property. In our case, the cost components would include direct materials, direct labor, direct overhead, engineer fees, architect fees, and also the interest cost. That's all for me.
Thank you, Mr. Chen Mei Hui. Now let our asset appraiser, Mr. Niu Wei Han, to share his part.
Good morning, everyone. Now I'm going to talking about depreciation. Among the depreciation methods, there are two main methods for calculating depreciation that we widely use. which is straight line method and reducing balance method. We use different methods on the different non-current assets. For example, the straight line method is we commonly use an asset like building, where the asset value doesn't necessarily decrease significantly over time. Then is reducing balance method. This often we use on the asset like machinery and vehicles, which tend to experience higher maintenance and repair costs as they age. For the property plant equipment (PPE), we normally use for 20 to 50 years and above. Then the machinery we normally use 10 to 20 years and above. Then the vehicles we normally use 3 to 10 years and above. Then for the depreciation percentage of the PPE is 4% per year. Then the machinery is 10% and the vehicles is 50%. Then we move to the useful life of every non-current asset. When we estimate the useful life of non-current assets, like vehicles, machinery, equipment, and buildings, it's essential to consider a range of factors, including both quantitative and quantitative aspects. So here are some factors to consider when we making reasonable estimate for useful life. First, you can see estimates usage. The intensity of usage can significantly impact an asset's useful life. For example, vehicles used for long-haul transportation may wear out faster than those used for a shorter distance. Then the next factor is maintenance practice. Proper maintenance and keep up can extend the useful life of assets. The next factor is in industry standard. For industry-specific guidelines and standards can provide valuable insight to typical use life for assets in your sectors. For example, the machineries used in the food production industry are subject to maximum age limit to ensure the food safety and hygiene. Then the last one is manufacturer's recommendation. Manufacturers often provide a guideline on the expected useful life of machinery and equipment. Those recommendations can be useful when estimate the asset life. That's all for me.
Thank you, Mr. Nohan. Now let our accounting manager, Mr. Ong Kang Hong, to share his part.
Okay, good morning everyone. My name is Ong Kang Hong. I will report the initial cost of our building. Our direct 3,920,000. The direct labor is 885,000 and the direct overhead is 500,000. Furthermore, payment for engineer and article fees were RM 100,000 and 150,000. Interest was charged by the bank for our bank loan was 50,000. Finally, the total initial cost for our building is RM 5,605,000. That's all for me.
Thank you, Mr. Ong Kang Hong. Now let's our financial analysis, Mr. Choi Tze, to share his part.
Okay, first I will call Mr. Wei Jun to send the financial statement. Okay, I already sent the financial statement to you all. You can see. I will focus on financial statement transparency by concentrating on essential components like as depreciation, property, plant and equipment PPE, long-term loan and bank interest payment. Our company depreciation includes a machine and a building. The equipment is used for manufacturing, while the facility is used to store items. Consider property, plant and equipment PPE. Companies should individually declude the cost, accrued depreciation and carrying amount for each PPE category. Any impairment or devaluation of its assets should be the cost side that has a major impact on carrying amount and communicate the value of condition of tangible assets. Annually, consider long-term loan and bank interest payable. Every year, our company must repay 10% of the loan amount plus bank interest to bank. Our long-term loan will be used to purchase property, rent, and equipment. That's all for me.
Thank you everyone for joining this meeting. Before end of this meeting, I have some questions. The first one is, why is it important for companies to provide transparent financial statement with detailed information about components like depreciation, property, plant and equipment, long-term loans, and bank interest payments?
Dear Mr. CFO, as for me, I think that the financial statement transparency is very important because it enables to affect the decision makings such as stakeholders, creditors, investors, and so on. Additionally, it can clearly show that the company's financial health through details information regarding elements including depreciations, PPE, long-term loans, and bank interest payments.
Okay, thank you. Have any add-on or addition?
I can. So I agree with the Mr. Benway said, and I want to add the opinion is the important for it is also have the ability to manage the assets and the liabilities. That's all.
Thank you. The second question is why it is important to consider factors such as estimated usage, maintenance practices, industry standards, and manufacturer recommendation when estimating the useful life of non-current asset.
Sorry, sir. It's important to consider those factors when estimate the useful life of non-current asset because they directly impact how long an asset can generate economic benefit for our company. There are not only estimate usage, maintenance practice, industry standard, and manufacturing recommendation. There are many other factors can help in making reasonable estimate for useful life, ensuring that assets are depreciated accurately. And knowing these factors can lead to incorrect financial reporting and misrepresentation of company financial health.
Sorry, I want add my opinion. I agree to Mr. Neo that the reason why we need to use the depreciation calculation method to prove that the value of the non-current asset.
Okay, thank you. The last question. How should bank loan interest expenses incurred during the construction period be treated when initially measuring the cost of property, plant, and equipment under MFRS 116?
Let me answer your question, CFO. Okay, when a company take a bank loan to build something like a property, the interest expenses that pay during the construction can something be added to the overall cost of the property. This only alone if centers conditions are met, but is extension to carefully look at the loan and construction detail to decision if the interest should be counted as part of the property cost or just treated as a regular expenses. Okay, that's all for me.
Thank you. Thank you all for answering the questions. In conclusion, I would like to express my gratitude to all of you. Your commitment to share vision is the driving force behind our financial achievement, and we look forward to achieving even greater milestones together. Thank you for being a part of this important discussion. I'm confident that we will continue to chart a successful financial course for StarFood. Once again, thank you everyone for attending this meeting.
Thank you.